Ladies and gentlemen, welcome. Good afternoon. Welcome to this jointly presented webinar with AFME and S&P Global Ratings on the future of sustainability in the European securitization markets. It's a very, very hot topic, as you all know. We're in the middle of COP26 at the moment, much wider topic than just securitization, but in this webinar today we'll be focusing in particular on the implications of green targets for securitization. We have a record turnout today. We have nearly 700 people registered for this webinar, which is the highest I think we've ever had at AFME for one of the events. So it's a real pleasure to be here. Securitization and the transition to the green economy, it seems to me, both an opportunity and a challenge. The big opportunity, I think, for securitization is for securitization to demonstrate to all those outside our rather sort of technical and sometimes difficult to explain industry that securitization has a huge role to play in helping to mobilize the capital that we need to fund the transition to the green economy. The challenge, on the other hand, as we all know, is that the complexity of our product means that there is some potential there for us to encounter difficulties. Particularly, I'm thinking in the realm of, for example, disclosure, where for the last 10 or 11 years, since the process of securitization regulatory reform has been underway, there's been a very long, ongoing and complex discussion with policymakers and regulators about disclosure in the securitization markets. Disclosure is a big issue, of course, for green finance, and the key challenge, I think, will be how to mesh those two types of requirements together without piling on ever more burdens on the securitization industry. It's a challenge faced by all types of finance, frankly, but I think particularly for us in securitization. So welcome. I'm delighted to be here. I am going to now hand over to Matt Jones of S&P Global Ratings, who's going to tell us a bit more about their work and outline the program over the next few hours for us. Over to you, Matt.
Thanks, Richard. I'm Matt Jones. I'm the head of Specialized Finance at S&P Global Ratings, and we're delighted to be collaborating with AFME on this virtual conference and on an incredibly important topic as sustainability is. With COP over the last couple of weeks, we've seen a number of commitments made by governments around the world, and these will lead to policy decisions that will impact the financial markets and to those assets that are securitized by lenders and financial sponsors in Europe. We hope that this conference today will provide you with the current insights as well as the current risks and opportunities that market participants face today, as alluded to by Richard there. To help frame the sessions we have this afternoon, I wanted to show the latest data with respect to global issuance, how securitization is currently contributing to it, and to show the approach that issuers are taking to label green and social structured finance transactions. Starting with global green bond issuance, we've seen approximately $290 billion worth of issuance in 2020. In year-to-date 2021, that stands at just over $230 billion. It's evident that securitization is some way behind at 8% of overall green labelled issuance, albeit that is up 7% on 2020. When you break that down by region for 2021, EMEA accounts, or Europe accounts, for approximately 16%, with the lion's share dominated by the US in the non-traditional space through solar asset-backed security and PACE, or property assessed clean energy transactions. Here you can see the trend in European green and social securitization and the very noticeable shift in issuance this year, which stands at approximately 4.5 billion euros of issuance. I mean, whilst the growth is encouraging, this only represents 7% of combined ABS, RMBS and CMBS publicly placed issuance. Here you can see a list of the transactions in the European market so far, which have been labelled as sustainable, green or social. Obvion, the subsidiary of Rabobank, has led the market to date with their Green Storm platform, and they securitise portfolios of mortgages for properties with high energy efficiency scores. But in 2021, you can see that there's been a marked increase, and we've seen issuers have taken greater strides in meeting investor demands whilst also developing their ESG narrative at the corporate level. As you can see from the table, we've seen a combination of green and social, mainly in RMBS, a small number of CMBS. We're yet to see anything ABS related. Green collateral has been financing of properties with focus on energy efficiency, with the social collateral criteria really centered around lending to consumers who don't have access to the full spectrum of financial services in any particular country, and aligning with the ICMA social bond principles through providing essential financial services. This table also highlights the different approaches issuers have taken to align the relevant set of principles, whether through a pure sustainable collateral or a use of proceeds, or a combination of the two. And this raises one of the principal debates currently happening in securitization, and we'll hear a lot about it on our first panel, which is whether can a securitization transaction be labelled sustainable if only part of the assets sold to the SPV meet sustainable definitions? Do the assets need to be all sustainability linked to meet the definition, or can, as we've seen in several transactions so far, can it be done through a combination of a part of the assets meeting sustainable collateral definitions, but with a clear commitment to use the proceeds from the transaction to originate sustainability-linked assets? And I think the question the industry has to ask itself is whether the sustainable securitization market will really be able to develop much further without broad acceptance of that use of proceeds approach. And the final slide, we just wanted to highlight what we've been doing at S&P. Over recent years, against a backdrop of the significant growth in sustainability financing in the global markets, there has been some concern raised by investors, all of whom are signatories to the UN PRI. These concerns have been around on the subject of green and social washing, as well as a desire to see greater global standardization. In response to this, we at S&P Global Ratings have developed a number of sustainable finance opinions. These have helped issuers develop their ESG thinking, and also label their issuance and begin their sustainability journey. For example, we provided Yorkshire Building Society in the UK with an alignment opinion for their newly developed social bond framework, which is at the corporate level and was used to label the Brass 10 social RMBS earlier this year. This slide shows just the variety of opinions that we now provide, and they cover use of proceeds financing, whether it be green, social, or sustainability, at the transaction or at the corporate level. Sustainability-linked financings, of which in the European loan market is seeing significant growth, as well as transaction evaluation, which assesses the net environmental benefit generated by a green or resilience financing, together with an opinion on the strength of the governance and reporting of the transaction, which is a major focus for investors. So to our agenda, there will be more on the use of proceeds debate on our first panel, which includes our own Matt Mitchell, Andrew Lennox at Hermes, and Mira Lamreben from the EBA. And the EBA have an important role to play in the development of the sustainable securitization market, and we all eagerly await their recommendations on that. The panel will also discuss current market practice and the impending wave of regulation, as well as investor expectations and disclosure. While the first panel will focus on sustainability, our second panel will focus on environmental, social, and governance factors as they relate to credit risk, subjects that are perhaps more established in market thinking, but again, may converge over time as markets evolve. As well as AFME and S&P experts on that panel, we'll also hear from Andrew Burgess at Britannia, as well as Alex Maddox at Kensington, who have led the way in the UK in sustainable financing this year. Now, before we hand over to Andy South for our opening panel, I'm delighted to introduce our Fireside Chat. Leading the conversation will be Richard Hopkin, and as well our very own Richard Mattison, President of S&P Global Sustainable One, who will share his views on the outlook for sustainability in the global capital markets. Richard, over to you.